Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, February 12th. The stock market covered its fair share of ground Tuesday, moving mostly in bullish fashion until a late-day retreat led by the big-cap technology issues cut into its gains. Warren Buffett provided the fuel for a broad-based rally in the early going when he told business channel CNBC that Berkshire Hathaway offered to assume $800 billion in municipal bond liabilities from the three major bond insurers, MBIA, Ambac Financial, and FGIC Corp. His offer mitigated the market's concerns about a large-scale municipal bond sell-off that might occur in the event the bond insurers lose their AAA rating. Buffett was quick to note that one bond insurer already said no to his offer and that he hadn't heard from the other two. The lack of interest is certainly understandable since the offer only extends to the municipal bond portfolio. The bond insurers would still be strapped with their CDO business. The market recognized the desperate nature of the situation for the bond insurers that was exposed by Buffett's offer, and hence their stocks languished in its wake. From a broader standpoint, though, Berkshire Hathaway's offer left the market cognizant that Mr. Buffett expressed an economic interest in assuming these liabilities now, and presumably will have that same desire in the future if the bond insurers get tripped up for good with the loss of their AAA rating. Accordingly, it was comforted by the realization that a safety net of some sort seemed readily available for the municipal bond market. The offer put a bid in the financial sector, which ended the day up 1.4% and led the early advance, although every sector went along for the relief ride that was also aided by the government's announcement of Project Lifeline, which involves 6 major mortgage lenders and is designed to help homeowners avoid foreclosure. At their highs of the session, the Dow, NASDAQ, and S&P 500 were up 229, 29, and 23 points respectively. Even General Motors, which reported a $1.5 billion adjusted loss before taxes for its North American business in 2007, gained ground. GM's gain ultimately did not hold as the market reflected on the idea that profitability for the North American business still seems a long way off. Moreover, it was not overlooked that the company's fourth quarter adjusted profit of 8 cents per share was driven by a $1.6 billion or $2.82 per share tax credit. When the latter is excluded, GM came up well short of the consensus loss estimate of 55 cents that did not include the benefit. Similarly, the tech sector did some backtracking in the afternoon trade, paced by its big cap components which had been outperforming in recent sessions. That selling pressure weighed on the broader market, as did a retrenchment in most sectors in the final hour. The tech sector, up as much as 1.2%, ended down 0.2%. The market, to its credit, gained some traction in the closing minutes to finish on an upbeat note. Still, the major indices closed the day well off their best levels of the session. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a great evening.